So hello and welcome back to our YouTube channel everyone, and this is going to be an educational video. In this video we are going to talk about moving averages. I will show you how to use moving averages and what is the purpose and what is going to be their uses in the trading system of yours, and how do I use and how you can use different types of moving averages, and what things they offer to a technical analyst or any person who is analyzing the stock prices or any index prices. So first of all, moving averages are one of the most popular and easy to use tools available to the technical analyst. They smooth a data series and make it easier to spot trends, something that is especially helpful in volatile markets. Here you can see that by this what I meant to say is that they smooth the data series. What I meant to say is that here you can see the prices. Look, prices are here in an hour, and again after some days, after some hours, the prices were here. So it is very difficult to see the prices. As you can see this, the prices on the chart right now, these bars, as you can see, these candles here, the different candles, they are scattered all over the place. Right here you can say, here they are on the top, then again a top, then a bottom, then again a bottom, then again a top, then again a top, then again a bottom. So they are scattered over the place. But here this blue line, this is a moving average, and you can see it that it is not scattered. Obviously it is also changing the direction, but it is smoothly changing the direction, not it is not proportionately changing the direction like the candles are doing. Look, here candles are so up and here candles are so down. So moving average also has changed its direction, but not has changed as many as these bars. Okay, so they smooth the things out. And let me show you this on a line chart. So this is a line chart. Now here you can see this blue line. Okay, let's change the color of our moving average so we can see it better and clear. Okay, so let's change the color of the line. Let's make it orange. Okay, so now here is our prices. This orange lines are our prices, and this blue line is our moving average. You can see this has smoothened out all the data. Okay, the moving average has smoothened out all the data. The price data is scattered all over the place, but moving average is not scattered. It is moving very smoothly. That's why now you can see the prices very easily through moving average also. So the two most popular types of moving average that are used by traders for so many years now are SMA and EMA. You must have heard these two names, SMA and EMA. So SMA is a simple moving average, and EMA is exponential moving average, and we are going to learn about both of these. Okay, we are going to learn about both of these, simple moving average as well as exponential moving average. So first of all, what are the uses of moving average? There are different uses of different moving averages, and we are going to learn those uses. So first use is trend identification and confirmation. Okay, so let me take this chart to the daily time frame, and here you can see one thing, that as the prices were rising, here you can say, so here the prices has started rising, so moving average has also changed its direction. When prices changes the direction, the thing is that we can't say it very quickly, okay, prices have changed the direction, so trend has changed, now an uptrend is in place. Prices takes time, but once moving average has also changed its direction, as you know, when we create trend line, we need actually, when we are creating an uptrend line, we need at least 2-3 lows to connect, like this first law, second law, third law, and then we'll connect this, and then we'll confirm that okay, that there is an uptrend in place. But here you can see moving average has changed the direction here itself, and it has signaled us that the okay, the trend has reversed now. The moving average is rising now. Okay, because moving averages takes time, they smoothen out the data, that's why they move slower to the prices. Okay, but for an identifying a trend through trend line, we need 2-3 laws. But once and moving average change its direction, we can easily see that yeah, the trend is changing, and after a little bit of upward movement with the prices, we can also confirm yeah, there is an uptrend in the place. and they also act as support and resistance. Let me show you. Here moving average was acting as a resistance. Prices could not go above this moving average line. Okay, so here it was acting as a resistance. Here also you can see prices try to came up here, then couldn't hold on to it. Then again in this range you can see the moving average has acted as a support. Prices were not able to go below this, and here in uptrend it is acting as a support only. So prices, they are like a dynamic support and resistance. So this is also in resistance, but this moving average also acts as a dynamic support and resistance. And people, when shorting a stock which is above the moving average, and if they are shorting any stock, they take a target, their first target on the moving average. The reason is that moving average is a support, and it is possible that prices may take turn from the moving average. So if someone who have short sold the Nifty index here, look at my cursor right now on the screen, someone who has short sold the Nifty here must have took the first target on the this EMA or this moving average, whatever he must have placed, and he must have booked the price because prices have reversed from here. So here this moving average has acted as a support. So that's the thing, that's how they are perform like dynamic support and resistance. So generating buy and sell call, okay, when the prices are above the moving average, generally the call is to buy, and when they cut below the moving average, they signals to sell any particular stock or index. We are going to elaborate it in the moving ahead. As we move ahead, I am going to elaborate it to you. There are different moving averages, and we are going to generate buy and sell calls through that. So please watch the video till end, and also watch the other parts that are going to come in few days on our channel to better understand how to generate buy and sell calls. So first of all, let's pick the simple moving average and let's discuss about it, how to calculate it, and what are the different simple moving averages and how to use them. Okay, so simple moving average is the most popular technical analysis tool used by traders. The simple moving average formula is calculated by taking the average closing price of a stock over the last X periods. The simple moving average SMA is used mainly to identify trend direction, but is commonly used to generate buy and sell calls. Okay, so trend direction, and the second thing is buy and sell calls. So now let me show you that how to calculate a simple moving average. So this is a line chart on the screen. As of now you can see this is a line chart. We have changed it from our candlestick chart. So line chart represents the closing price of one day. Okay, a point in the line chart is representing a closing price of any particular day. Like this right now, you can see the time here. Here is the time frame, and here you can see the prices. Okay, so keep an eye on it. So here is the 23rd Feb 2021. Right now my cursor is on, and you can see the closing price was 14,707. So now it will be a big calculation. So let's take a stock whose stock price is not so much. So I'm opening Tata Steel BSL. That is a stock whose stock price is not so much, so we can use that stock. So here we are going to take it. First of all, let's change this EMA let's change this EMA. First of all, we are going to use another. So let's use simple moving average. Okay, so simple moving average, we are going to no strategies, we need a simple moving average. Okay, so this is something else, we don't need this. We have to remove it. Let me remove this also. This is a 50 EMA. I'm going to remove this as well, and I'm going to place a simple moving average. No, this is not a simple moving average. So here it is, two simple moving averages now are in place. So okay, now let me show you how to calculate it. You can see the moving average on the screen, but let me also show you how to calculate it. So let's take the first price on the 29th January 2021. So price was 37.65. Okay, so 37.65. Okay, add the next day price. Let's assume the next day price was 37, so 37 and plus 37.2, and then we are going to add another. So this is the 3 days price have been added till now, so let's add 38 now, plus, and the last price will be our 37 point. So now the total is 187.35. Now let's divide it by 5. So 37.47 is going to be the first point on our EMA, on our SMA. So 37.47 is going to the first point on the SMA, and then what we are going to do is that as the next day trading happens and the price closes, what we are going to do, we are going to remove our first day's price. As we have added the 37.5, we will remove it, and we are going to add the newest day price into it, and then we are going to divide by 5, and that's how we are going to calculate the SML line. So this is how the SML line is calculated. So I hope you have understood whatever has been communicated to all of you till now, and in the next part of our moving average sessions, what we are going to do is that we are going to learn the uses of the simple moving averages and how to take trade and how to use different simple moving averages in your trading system. And then further we'll move to the exponential moving average, obviously, because exponential moving average is the most widely used moving average, and there are also strategies in which we use different SMA and EMS together. So everything will be communicated to all of you. So stay tuned on our channel. Until then, please do subscribe to our channel and share this video with your friends and family, and press the bell icon to receive the notifications of the upcoming videos. So thank you so much for watching, everyone.